On today's SNHU Explains, we talk to Dr. Zuzana Buzzell. She's the Associate Dean of Business here at SNHU. We cover everything from the difference between a public and private company to the value of a business degree. So stay tuned. Can you just tell me your name and your title here at SNHU?
So my name is Dr. Zuzana Buzzell, and I'm the Associate Dean in Business, and I oversee multiple programs in the business department.
Great. And how long have you been at the university for?
I have been with the university for 10 years full-time.
So can you tell us about your experience and background in business? Can you talk about your role as a senior business analyst?
So yes, you can't hide from your prior experiences when there's LinkedIn and social media.
Yes.
So I have been with Fidelity in the finance industry prior to joining SNHU full-time for about 9 years. And I have gone through multiple roles at Fidelity Investments. And what I liked about being at Fidelity Investments, it gave you the opportunity to truly explore the financial field. You were exposed to multiple departments. You were able to work with securities. You were able to work with people in field where your interest was. So from investments, from accounting, and also where I was as a senior business analyst, I was able to work with our amazing team in India. So they were supporting us. We forget that Fidelity is actually a global company and they have a support in India. And we had a large team in India and they are amazing counterparts, and we worked with them on a daily basis as processing trades and etc. So that was very interesting. It gave me the exposure to derivative securities, and it gave me the exposure to funds. It gave me a lot of exposure to different fields in finance, and I enjoyed every single year. Of course, not every single day, but that comes with the territory of being in finance.
Yeah, I was going to ask how you would describe this role, but you did it really well there. So I think my next question would be more so, what does someone need to succeed in a role like that?
I think it depends where you enter in finance services. If you strive to enter, there are multiple ways to enter finance services. There are multiple opportunities to go into a starting position. You can start with position as an accounting analyst, which every single financial investment company needs, where you process accounting for investment funds. And then you are doing accounting for funds, and you release the prices at the end of the day. Or you can also start as a investment advisor on the phones or in person, perhaps, where you have to actually complete a Series 7 or the base investment certifications. And that will allow you to help people such as us, myself and yourself, who invest in their, me or you who invest into their retirement portfolios, to help us decide what funds we need in the investment portfolios, because every single investment corporation needs those people. If you're talking about banking, it's, again, you can enter the banking industry through a different ways. And one of them is the teller positions. And those are ones where you learn and you can truly expand and go up in your career.
And that kind of leads into now what we're going to talk about today is the difference between public and private companies. So to start really simple, what is the difference between a public versus a private company?
So the best way to look at it is 3 steps, right? So you have private company is either one owner or multiple owners, and they hold all the ownership to themselves. So they make the decisions, they don't have to release any information about the company, and they make every single decision on investments, what do they do with the company in the future, etc. And then you have public company, which is, they are listed on the stock market, they have shareholders, and they have reporting to the Security Exchange Commission every quarter and every year, so annual, quarterly, and semi-annually reporting. And they, of course, have shareholders, and there's a clear valuation of the company. And shareholders are, again, every single person who buys into their portfolio within brokerage accounts or retirement accounts. And sometimes we hold companies that we don't even know we hold because we buy into mutual funds in our retirement portfolios. And they always update the companies within those mutual funds, and we might hold companies that we weren't aware we are holding. So sometimes you think, I would never be able to afford Microsoft shares. Well, you might be holding them in one of your mutual funds, and you don't even know about it. Speaking about Fidelity, Fidelity is actually a privately held company. And in order to entice sometimes employees and to reward good or longer employment, longer terms employment, sometimes private companies offer privately held shares. And those are offered to employees who worked at a privately held company for a long time. Those are not sold publicly. And those are offered as a benefit to the employees who stay with the company for a long time. And they could be offered on a 10-year basis. You are there for 10 years, so you get offered these private shares. And then you can, when you retire or when you leave, you can take those with you. And those are worth a lot of money sometimes. IHOP is one of those too.
So what changes do businesses need to undergo when they become a public company?
There are multiple changes. So you need to specify your intent to go public. And you have to have the valuation. And in order to have the valuation, you need to open your books. So you need to be open about how are you doing? And you have to be worth at least $1 billion. And we call them the unicorns, right? That's a nice word, unicorn company. And you have to open the books because they need to value the company, and they need to know how you're doing within the industry and if it's sustainable and if you will be able to maintain those shares. And, there are several things you have to be open to. You have to be open to oversight. You have to have board of directors. You have to be prepared to allow regular filings to the SEC, and you have to be ready for audits. And you have to be ready for the scrutiny. So that's all that's happening. Pretty much IPO, it could be very intrusive at the beginning because all of those financial papers need to be in order and need to be filed to be eligible for an IPO.
So obviously that's a lot of things a company has to do. So what are the advantages of being a public company?
It's easier access to funding. If you're a private company, you can fund via loans. Definitely you can find banks. You can self-fund through retained earnings. If you have good projects, if you have good products, then you can fund through self-sustaining products and some private loans. But if you're a public company and you're out there, everyone knows how you're doing and everyone knows your valuation. So you have access to a lot more funding. And that means that you can either issue bonds if you need more money, or you can issue additional shares. And it is also easier for you to obtain loans because everyone can see this company is doing well or not so well, or this company is actually doing poorly. And based on that, they can give you a loan, deny you, and also give you the interest rate you need to get in order to obtain a loan. So I think it's all about getting the funding as a public company.
So you talked about some of the advantages. What are some reasons organizations decide to become a public company?
Decide to become or not become public company?
To become one.
To become one.
Yeah, why go from private to public?
Okay, so because once that's, Usually when you see companies become public, it's a successful business. You have 1, 2 people or multiple people that started a business and they're successful at it. Well, if you have that business, what do you do with it? How can you grow it? And most importantly, how do you get money out of it, right? You're a founder of this great company, but that's all you have. It's your company, and how do you get your money out of the company? If you make it public, you can buy yourself out, sell your shares, or partially sell your shares, and get the money out of the company. It also allows you to expand your products. Because if you don't have the funding, then you're kind of balancing the act like, okay, we are here, we had a great product. How do we expand it? How do we expand our company without having the additional funding? If we have investors, we don't need to do it. Great. But how many investors will trust us without providing them with evaluations, without our books and so forth? And if you have to go through that effort, a lot of companies decide to go all the way and go public.
So that explains, the why for the company it could be good things, but why does it matter for the consumer if a company it goes public?
So if you buy a normal product, it really doesn't. If you are an investor into your retirement portfolio, you can only invest into public companies. So it really doesn't. There you only have to look at, do I really like this company? Do I trust this company? Is it ethical? So there you decide with what are you comfortable with, which company you're comfortable with, and decide based on that. But where does it matter for a consumer? If you are an investor who has been looking at a company for a long time, you have been a user of a product for a long time, and you would like to, and they are going public, and all of a sudden you say, you know what, I have been user of this product for a long time. I really like this company. I would love to be a partial owner of this company. So then you can purchase the shares.
Can you explain what an IPO is?
It's an initial public offering, and that's pretty much when companies go, they put forward the evaluation to the banks, and they offer the shares to open market, so they go public. It's, you think they go public, but in reality, they first go to, it goes to institutional investors first, and then it goes to public, which is you and me. So institutional investors, such as the big investment firms, always get a first dip. And then it goes to other investors. And in every single IPO, and now this is, sometimes it happens, sometimes it doesn't happen. There's always speculators who short the first IPO. When it comes out, they think they will win the market. Sometimes it doesn't happen. So, there's always speculators when it comes to IPOs, but initial public offering, it always goes first to large investors, institutional investors, and then additional investors.
So recently, a website that I use quite frequently, Reddit, has gone public, and I was just wondering, why is it a big deal when a company like Reddit transitions to a public company?
Yeah. So Reddit has been one of those companies that everyone had an eye on. And there's a couple of things. It is a social media company that it is the first IPO of a social media company since Snapchat in 2017. And the Wall Street is always a little bit wary when it comes to social media companies because they depend on one thing, and that's users, right? Now imagine you have a product that's dependent on, Christian and Zuzana chatting every day. Now, Christian gets sick and Zuzana gets sick, and then we stop chatting. What's happening to the product? Now, that's not going to happen to Reddit. They have 73 million users. But they need to expand their offering to e-commerce. So that's what they promised. They have to expand their offering to e-commerce and commercials. But again, it was a free platform and they're depending on users to create their product. So they're dependent on people, public, to create something they can monetize. And it's mostly within the US. So majority of the users are US users. So they need to capture a global market too. And that hasn't happened yet. So they need to be also like, how do we capture the global market? And how do we make sure that people don't get turned off by us being an IPO, being public, and still keep contributing? And now the moment you're public, you're under scrutiny, right? So what is going to happen to the post? Are they going to be still allowing all the posts? Are they going to have to monitor what's posted? So those are all the questions that are being asked right now.
Yeah, and isn't it possible, like the more they monitor the posts, the less people are going to want to use the website?
Exactly.
That's interesting. Is it?
Yes.
How has this happened? I know you said Snapchat. Is there another example like this that has happened with a social media company?
Well, we had Twitter, then it went to X, and now it's private. That was a different situation. But that again went through, you had to monitor and you had to stop certain posts. The same happened to Facebook. There's monitoring and you have to stop posts that are not meeting the requirements.
And is Reddit depending on, because I know each subreddit has a moderator, which is just a random human being. Like I could be a moderator, you could be a moderator. Are they going to depend on those people to monitor the posts now?
That was their business, pretty much. That was their business product, how they have done their business, right?
Yeah.
Will they now have to have a professional moderator? And how is that going to figure in their bottom line?
Right.
That is all those questions that not only Reddit is asking, but Wall Street is also asking.
Yeah, that's very interesting because it kind of goes against what the original idea behind Reddit was if they hire professional moderators. So it'll be interesting to see if this works out for them.
Yes. But also the IPO was a little bit different. They had the first offer. They promised to have the first offer to the most, they call them karma posters. They offered to the people who offered the most.
Yeah. Okay, great. So now we're going to transition to just some general SNHU questions. We only have a couple here, so we're wrapping up pretty soon. But can you tell us about getting a business degree at SNHU? If I'm not mistaken, you went to SNHU, correct?
I did, yes. And, it is my alma mater, at least a graduate school.
Yep.
And then I think what I like about SNHU degrees, I like the flexibility, and we have a lot of degrees to offer. And I like that you can, no matter where you are, what corner of the United States or the world, you're still receiving the same education as everyone else. And I like that. And if you are receiving the education, the business education, you are receiving it from real life professionals that work in, finance industry, work in project management industry. So they are bringing you back to the industry and to what they know. And if you ask them, it's not just based on textbook. It's based on you really need this in order to succeed in this field. So that is important. And do not underestimate going to get your degree as a continuing education student as the power of networking. You're meeting so many interesting students along the way and so many interesting people. Just the power of networking from different corporations, different states, and, different career, where they are in their career, the people, it's amazing. And I always, whenever I teach, not only do I teach the students, but I always walk away learning something new. And that's priceless to me because we have very, very interesting students in our classes.
That's one of the great parts of our job. We get to travel around the country and meet students from California to New York. And you highlighted it really well there, where their different experiences are what makes SNHU such a great place to be, because somebody thinks completely differently on the West Coast and they do the East Coast. And that's really great to bring to a class. I think my final question is just in general, what are the benefits to a business degree?
It is very flexible. So you're talking in general about business degree, but business degree that's MBA or, BSBAD. But within the business department, we have many degrees that relate to the business field, but not necessarily are MBA or BSBAD. They could be accounting, they could be specifically finance, they could be project management, they could be leadership. So you can be very open and just get the business, or you can specialize, or you can get business and then specialize with a minor or a concentration if you are undergraduate, or go ahead and tag on a certificate. So the business-based business degree gives you a great start, and you can pretty much place yourself almost in any corporation, any organization. But the moment you specialized in any field, or a specific field, you could go and truly explore a career of your choice. And that's the beauty of business, because you can always specialize from business to a different industry.
That's great. I think that's all I have. Yeah, thank you so much for joining us.
Thank you so much. I appreciate the time. Thank you.